This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that is increasingly positive in the world's largest economy. First up today, retail signals in the US are quite positive. Their Red Book survey of bricks and mortar stores shows sales rose 3.9% last week from the same week a year ago, handily besting inflation again. And a bounce back in orders for transport equipment, including aircraft, gave a more than expected push to their February durable goods order levels. They came in 8.9% higher than a year ago levels. And capital goods orders came in at 11.8% higher on the same basis. Certainly boardrooms are giving bullish signals about the future there. Meanwhile, February house sales volumes rose in February. They're up a strong 9.5% from January on a seasonally adjusted basis, but that still left these transaction volumes 3.3% lower than year-ago levels. House prices in the US rose marginally, ending a long string of month-on-month retreats that started in July 2023. It's a shift higher that others have noticed too. Given this set of positives, it is maybe a surprise that consumer sentiment didn't improve in the March Conference Board survey, but it didn't slip either, holding its recent levels. The current mood improved, but anxiety about the future did too. The latest US Treasury 5-year note auction was very well supported, delivering a median yield of 4.19% and slightly lower than the 4.25% at the prior equivalent event a month ago. These public debt auctions are not showing any of the expected stress that Doomster's anticipated by now. The lower yields are probably being driven by normal market expectations of upcoming rate cuts by the Fed. Of course, that doesn't mean the outlook is any better. It isn't if no action is taken by Congress to address the federal deficits. In Canada, a measure of their wholesale trade activity rose more than expected in February. And in Singapore, they reported a better than expected rise in manufacturing production. It grew 3.8% in February from a year ago, easily beating market expectations of a 0.5% rise. The upturn was mainly boosted by a sharp rebound in biomedical manufacturing. The US Treasury 10-year yield will start today at 4.24% and down 2 basis points from this time yesterday. And the price of gold will start today marginally firmer by $2 at $2,177 an ounce. And oil prices have risen 50 US cents to be just under $82 a barrel in the US, while the international Brent price is unchanged at $86 a barrel. And the Kiwi dollar starts today at just on 60.1 US cents and marginally firmer than this time yesterday. Against the Aussie, we're also marginally firmer at just over 91.9 Australian cents. Against the euro, we're firm slightly too to 55.5 euro cents. But that all means our trade-weighted index starts today at just on 69.3 and essentially little changed. And the Bitcoin price starts today softer at $69,695 and a 0.8% slip from yesterday. Volatility over the past 24 hours has been modest at also just on plus or minus 0.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.